If you've invested in real estate before, but never done large multifamily or invested in a syndication, you might be confused by some of the terms we use when talking about commercial financing. So I'm going to give you a rundown of how we typically finance our large projects, the pros and cons of the loan products we use, so that when you are looking at potential opportunities, you'll know how the sponsors are financing the projects. Welcome back to Multifamily Monday series. I'm Kelly Ioannone with Waypoint Commercial Investment Partners. Recently, I was asked by a potential investor what it meant in our investor presentation when we said bridge to agency financing. Understanding what we call the capital stack is an important piece of a project that you as a limited partner need to understand. This is what tells you when you get paid in what order. Banks and taxes always get paid first and second, followed by you, the limited partner, and then finally us, the general partners. Bridge debt or bridge financing is used for a short-term financing to stabilize a particular project. So when we're looking at value-add apartment syndications, that we are going to be infusing quite a lot of capital up front in order to stabilize the project through interior and exterior renovations and operational efficiencies, we will use bridge financing for that. This allows us to have a shorter term loan that doesn't have payback penalties typically. We are able to use a loan with interest only in order to optimize the cash flow for our investors. And then once the project is stabilized, we will refinance out of a bridge loan, which comes at a higher interest rate, into what's called agency debt or an agency loan. And agency loans are government-backed loans. Typically, Fannie Mae and Freddie Mac is what we'll typically talk about here. These loans are the creme de la creme of what we're talking about from a commercial investment property perspective. We can get the longest loan amortization period, typically 25, 30 years. We still usually have a year or two of interest only on the front end before we start paying down the principal of a particular property. But these loans have very stringent rules. Projects need to be stabilized, which is why we first acquire properties typically with a bridge product and then refinance into an agency product once the project is stabilized. Hopefully this information is helpful for you as you continue to look at potential opportunities to invest in with sponsors. As always, if you have any questions on the terms or strategies that are outlined in investor presentations, don't be afraid to ask the question. Engage in the conversation. You should expect to get transparent, direct answers from those sponsors. And if you don't, that is a red flag. That's it for this week. I look forward to seeing everybody next Monday. Take care, everyone.